In 2021, ProPublica published leaked IRS data, revealing that the 25 richest Americans paid a true tax rate of 3.4%. Jeff Bezos paid zero federal income tax in 2007 and again in 2011. Elon Musk paid zero in 2018. Warren Buffett, the man who famously said his secretary pays a higher tax rate than he does, had a true tax rate of 0.1% over 5 years. This isn't illegal. Every dollar they didn't pay was structured through mechanisms written directly into the tax code. In this video, I'm going to show you exactly how it works and why it's almost impossible to fix. The first thing to understand is that billionaires don't have income the way you do. You work, you get paid, you get taxed. Simple. But billionaires don't take salaries. Jeff Bezos paid himself $81,840 a year from Amazon, less than most of his warehouse workers earn in overtime. Elon Musk's salary from Tesla was $0. Their actual wealth doesn't come from paychecks. It comes from the rising value of the stock they own. And here's the critical part. Unrealized gains are not taxed. If Bezos owns $100 billion in Amazon stock and that stock goes up 20%, he just got $20 billion richer and owes the IRS exactly nothing. Until he sells, it's not income. It doesn't exist on a tax form. The entire first pillar of billionaire tax avoidance isn't a loophole. It's just the definition of income, but they still need to spend money. How do you spend $20 billion in gains you haven't paid tax on? You borrow against them. Banks will lend billionaires hundreds of millions of dollars using their stock portfolio as collateral. These loans are not income. You don't pay tax on money you borrow. The loan gets paid back later, either from other loans or from a small, carefully timed stock sale. Interest rates on these loans are often 1 to 2%, which is dramatically cheaper than the 37% income tax rate they would face if they actually sold the stock. This strategy even has a name on Wall Street: buy, borrow, die. Buy the asset, borrow against it to fund your lifestyle, and then die, which is where it gets truly extraordinary. The die part is not a joke. When a billionaire dies, their heirs inherit their stock. Under current U.S. tax law, inherited assets receive what's called a stepped-up basis, meaning the cost basis of the stock resets to whatever it's worth on the day of inheritance, not what it was originally purchased for. If Bezos bought Amazon stock for $1 in 1994 and it's worth $3,000 when he dies, his children inherit it at a $3,000 basis. They could sell it the next day and pay zero capital gains tax, because as far as the IRS is concerned, there are no gains. A century of appreciation, untaxed, forever. The loans taken against the stock get repaid from the estate. The gains that funded an entire billionaire lifetime of borrowing disappear at death without ever being taxed. None of this happened by accident. The 1990s saw a deliberate expansion of stock-based compensation for executives, creating the exact conditions for this strategy to flourish. The carried interest loophole, which allows hedge fund managers to pay capital gains rates on what is functionally their salary, has survived every attempt to close it for 30 years. Because the people it benefits spend generously to keep it open. And the IRS itself has been systematically defunded. In 2010, the IRS had enough resources to audit roughly 1 in 8 high-income earners. By 2018, that number had fallen to 1 in 45. The probability of a billionaire being audited today is actually lower than the probability of an earned income tax credit recipient being audited. The people who can least afford a mistake are the ones getting scrutinized. The ones who built their fortune on the complexity of the code are not. The tax code isn't broken. It's working exactly as designed, just not for you. The system that requires a warehouse worker to pay 22% on every dollar they earn allows a billionaire to accumulate wealth that compounds across generations without ever triggering a tax event. Understanding this isn't about anger or politics. It's about understanding the actual rules of the game you're participating in, whether you chose to or not. You cannot use these strategies at your scale. But knowing they exist changes how you think about what the system is optimizing for and who it was built to serve.